The 90s dot-com bubble that started after the 1990 recession was 2,800% into the peak of early 2000. Now that was over the span of 113 months, so nearly 10 years. But if we take a measure from the latest stage of the dot-com bust, or boom into bust, was roughly 350% over a year and a half. Now, if you've been here a while because you've subscribed to the channel, then you know we're leading into the peak of the 18-year cycle. And it seems like we're repeating things from previous cycles. We've already seen banks begin to relax their lending criteria, all thanks to the government rolling back legislation and laws that they had passed post 2008 GFC. Now we're also heading into the mania phase of what we have seen 30 years ago with the dot-com boom, when the internet was just becoming a thing. This time, it is different. And if you're not watching your screen, quotes, this time is not different, but it'll be a different cause. The same effects will happen. This time we're looking at AI, and we're seeing a lot of AI stocks hit new all-time highs in the last few days. Now, I think this is going to carry over into the rest of the markets like Bitcoin. And of course, we're also seeing metals also go up in this blow-off top phase of the market. It's almost like something new every day with a new all-time high in a different sector. We've got heaps to dive into. Hit the like, subscribe to the channel. You're one of very few who have stuck around in the markets this far. We're seeing the data shift at the moment with the views dropping on some of the videos. And typically when that happens, if we're in a bull market, we are going to see higher prices in the coming weeks. Now, when there is a lot of views, generally, we're probably somewhere around a peak. So I think we've still got more time, even if it is just for that sentiment reading. Now, as I said, I've got lots to get through in the video, but if you had been subscribed, you should get your Bitcoin report free to you last night, and also your economic report that came out on Tuesday. If you're still not subscribed, it's a link in the top of the video description. Okay, after that mega intro, so much has happened in the last 12 hours. Unemployment rate was actually better than the market had expected. We're at 4.1%, new all-time high for the stock market. We've seen the NASDAQ go up to new all-time highs as well, even though some of the narrative is around AI taking away jobs. How does this all relate to crypto and the stock market? Well, my theory is that we're still in a macro bull market. We still have higher to go. And therefore, it's probably likely we'll still see higher prices with Bitcoin. We haven't seen any of this change, and it doesn't seem like it's changing in the near term. Looking into 2025, it still looks like we have further upside. Now, the interest rates also flipped on their heads in the last 24 hours. As I showed you yesterday, we're at 75% chance of the market pausing here with the interest rates, or the Fed pausing the interest rates at 4.5%, and there was a 25% chance of them cutting. Now, with that data, the unemployment rate, 4.1, the forecast was to go higher at 4.3, but it came out lower than the previous reading at 4.1. We saw interest rates flip back the other way. This data right here, the market has now said probably unlikely we're going to get a cut, and it's going to be paused again. So Trump has probably got another 2 months left of him complaining about Jerome Powell and why the interest rates should get cut and why Jerome Powell should quit, yada, yada. As we've discussed on the channel now for several months, it's probably likely that the interest rates are going to remain on hold, or even if they do get a slight pause or cut, sorry, they're probably going to have to go up again because the yields continue to climb here. The US dollar continues to fall, and the bond market really isn't looking that healthy. So there's really nothing to entice people buying the debt from the US in US dollars if their dollars are going down. So that's the unemployment rate news until the next unemployment rate news. Overall, we've been saying this for years on end. Markets going up, winner's curse phase, stock markets are up, Bitcoin looks like it's up. Real estate is the main driver here. Land prices, not the house on top of it, but the land prices continue to go up. And on that news, we also have more news of house prices going into new all-time high territory. US home price history. This is over 130 years of data. Some of the highest levels that they have ever seen in their history. It is the Case-Shiller Home Price Index at a new all-time high price. This chart is inflation adjusted, which is still at new all-time high prices. So very, very high. Land prices are up, and that is what leads the cycle out of the lows and into the peaks and into the corrections. It is the land price. Nothing, well, not necessarily nothing, but it is not driven by the banking sector. It's not driven by the tech sector. It is driven by profits going into land, and the land prices keep going up. That is what the data keeps saying. So we have 8 days in a row where the low did not break the previous day's low. Now, some will just look at this as being green, but the main thing here is the price. The price is, well, basically higher lows the entire way and almost higher highs for each of these bars, just with one inside bar here. But essentially, prices have continued to go up. Looking at the short term, when we've seen this occur, somewhere between what Gann says is a 7 to 10 day rule, we often see the market reverse, but it doesn't have to be severe like we saw in April. I've got a count here using the Gann Swing Pro. We had 7 days up, we had 8 days up. This is all through these extreme market sentiment emotions, which I'll get to in just a sec. But looking at the day counts, which is very, very straightforward, you can see that the market has reversed. And I did a rough count looking at each of these times over the past about 5 years, and it's done about 2 to 5%. There are some outliers, but if we just look at 2 to 5%, you can go through and count a few of these areas. There's the 7 day from the top to the bottom until it broke back past that top, 3.4%. Coming up to the 8, you can see the correction here, 3.7%. It broke just to a new high, and then of course we had the tariff collapse, and you can go back. Now there are a few there that were slightly larger, but as I said, roughly 2 to 5%. If this is the case here at 8 days in a row, 2 to 5% really isn't anything overly dramatic. 2% down to 6,200 points, 5% takes you out to about 6,000 points. So all in all, the averages would suggest that there is a chance of 2 to 5%, somewhere between now, the 8 days up, and like we've seen over the last 5 years on about 15 occasions, there's only been 15 occasions that we've seen the market go between 7 and 12 days in a row. So it could be between now and the next 4 trading days. Of course, there is a public holiday for the US tomorrow. So all this is saying to me in the short term is just to watch out for any sort of corrections. A longer term bull market still going up. And something else with the market sentiment now, which hasn't shown up since December, so going back 7 months, is of course the market sentiment for the US. Here is your II sentiment survey. The latest one has just come out. Bullish. 45% of investors are bullish, 22% are neutral, 33% are bearish. So this has been the largest move to the bullish side that we have seen, at least going back to Feb. But what I've done is get you all the data here, and going back to look at December 5th, 2024, 48%. So 48% were bullish at that time. The big one I'm watching here is the bull-bear spread, roughly 18% between the bears and the bulls, forgetting the neutral at this point. But that tells me that yes, although there could be a short-term correction, as we've also looked at with the data, watching how many days in a row to the upside, and then looking at percentages to the downside as well, it still has further to go to extend this differential before there could be an even more significant correction. So that type of correction, you'd have to look back at some differentials here, going even further back into October. You had 28%, 20%, 14, 21, but mostly these were all in a row. You saw a lot of bulls, not too many bears, but in a long drawn out period here. Look at that, 18, 26, 24. That's over the course of, well, look, a month and a half there. So it can still go a lot further than what people expect it to. And of course, when things get into new all-time highs, a lot of people do expect that the market corrects every single time. And I don't think that's the case as we lead into this sort of repeat of the dot-com boom. Now, what I've got here is the monthly chart of the NASDAQ and how it ran up into that extreme boom. The thing that happened along the way are checks in the bull market. What I call checks because you've got the run up and then the correction. So we're on a monthly chart here. These are the corrections. You can see the percentages drawn down. And just to highlight it with the arrow, runs up into a peak. It broke out of this resistance level, about 400 points, ran up to 600. It corrected 15%, just gave the bulls a check. They were still there, ran up again, checks them again. Basically like seeing their hand. Yep, bulls are still in control. Let's run it on again. Another check happens. 18%, 15%, 17%. It runs up again because the bulls are still there. They're still holding. Not as many sellers as there are buyers. That's essentially all it is. It's that simple. Now we're looking at 19, 20% correction, and it holds again. Runs up, gets another check. This time you can see the checks are getting larger. You're at 17, then you're at 20, now you're at 28%. So bigger drawdowns to the downside. They're still holding in, testing previous resistance levels and holding a support. Now this final move into the peak, as I talked about in the intro, is pretty much where things go stupid and no one thinks to check the market anymore. It's almost like retail gets in. And these times can go on for a very long time. If you take a measure from the low of the last check into the final peak before it got checked for 40%, that was 17 months. So call it a year and a half with no real significant checks. You can see the lows for each of these moves was basically held in and only barely tested. So the monthly low was barely tested and then closed higher in the cases where that monthly low was checked. So basically watching that thing run all the way up before a massive correction into a lower swing top. And then we all know what happens from that point. There was about a 85 or 90% correction for the entire market cap of the NASDAQ. And obviously with many of those tech stocks, they never made it back from that correction. So here we are again at some pretty significant levels. When you zoom out, linear chart, it's starting to look a little bit crazy. But as I pointed out, you can see that the market was getting checked on this period all the way up from 95 up to about 98. I think, and I could be wrong here, but I think we're somewhere around this sort of 1998 period where we might be in for some of those last real checks of the market before things go a little bit stupid. So we've had that check with the April low. And if history is going to repeat, things could get a little bit stupid from this point. We did have a check of 25%, came back to the previous all-time highs. And prior to that, we did also have that 38% correction, so basically check in the bull market, and of course things ran on. In the interims, there were other checks of about 12%. That was 3 months down. Then we had the August correction. That was about 16%. So there have been times along the way, and now we're at new all-time highs off the back of AI going pretty crazy. Now, I think it's obviously going to have a massive impact in the world, but is it going to get out of hand? Most likely, I think. And it'll have to come back to, or at least the prices of those stocks will have to come back to, calm down after the stupidity of a bubble. Now, with this bubble, I think Bitcoin is going to benefit from it, even though it's not directly related to AI. Yes, maybe some altcoins are going to get a nice pump if this AI thing catches on and cryptos keep going. But I'm mostly concerned here with BTC, as I suspect you are as well. Let me know, hit that like button, or give us a comment down below if you're actually interested in a few different stocks or altcoins. But here we are. This is the Bitcoin chart in white with the NASDAQ in the colored behind. Something I've talked about before is Bitcoin's tops come in roughly around the same time as the NASDAQ tops, not the end of the cycle, but just significant highs. You could call them local highs, but basically significant highs. For the S&P, it can run 1 or 2 or so months longer because it's made up of the banking sector as well, and the banking sector seems to be running a little bit hotter here because we're at the end of the real estate cycle. Banking, obviously making a lot of money from interest rates. Interest rates are high. Giving out mortgages, making money off those mortgages, and those keep running even though other sectors may not be making the money, like the home builders, which have been coming down. So looking at Bitcoin here, NASDAQ, new all-time highs. I think it's only a matter of time until Bitcoin hits its new all-time high, as it seems to be running pretty on point here with the NASDAQ. Even in those local tops, you can see back in April 2021, Bitcoin's local top, the NASDAQ also had a top, corrected in May, but then of course ran up into its peak in November 21. Bitcoin also ran up to its peak of November 2021. Then you had the March 24 peak here for the NASDAQ, March 24, correction into April 24, still more strength there for the NASDAQ, ran into those peaks around December, January, and of course February as well there for the NASDAQ. But for Bitcoin, those closing prices were roughly around that same area, November, December for that peak. Here we are, new all-time highs. So in terms of that blow-off move, AI seems to be taking the cake here. You've got Microsoft, new all-time highs. You have Nvidia, new all-time highs. You have a few other stocks here close to their all-time highs with Meta, pretty high up here. Amazon climbing back. Apple also doing its thing, climbing back. And of course, Google as well, with a lot of investment into AI also climbing back. In terms of the largest market cap stocks and assets in the world, gold here at 22 trillion, Nvidia, Microsoft, Apple, Amazon, Alphabet, all AI, basically making up the majority of the stock markets and in the lead with those gains to the upside, putting in the biggest gains. So it just seems all the money is pouring into those areas. Bitcoin down here at 2 trillion, silver also at $2 trillion as well. And silver has had another good day here, closing higher again after 6% correction over the last few weeks. Got another day up. Looks to be attempting to take out the $37.60 level, which was February 2012. If it does that, we'd be looking at a new 14-year high price, and then we'll have to wait till the end of the month for that close. So again, big bubbles underway. In this case, as I'm watching with metals, obviously Bitcoin, stocks, AI in particular, stock markets, the NASDAQ looks like it's got bigger moves to be had. S&P, and of course real estate is at new all-time high prices. Whether that blows up again, another question, but it is at new all-time high prices. So as for Bitcoin, how can this happen? Well, I think the stablecoin market has to give way. I think some of these stablecoins have to eventually leave the wallets of the holders and then go into something like Bitcoin, ETH, or some of the other. I'm not saying that ETH is strong at the moment, but maybe some stronger alts. XRP is still holding up relatively well, but let's start with the stablecoins before I continue on with the market sentiment for crypto. Looking at where this sits today, 6.6%, the support level still lying at 6.2%. Now this is for the combined stablecoin market, USDT and USDC, 6.2. Any sort of break surfs between 6 and 6.2, probably going to be good things, at least for Bitcoin, which is showing the strongest move here. So that's another reason why I think Bitcoin has further to go. Of course, it's the stablecoin market, which isn't looking the strongest, but is just holding that ground. In terms of the sentiment, Bitcoin has been picking up since the 28th of June. The reading was at 34. Currently, today's at 42, whereas crypto still really isn't being searched much. You can see it's kind of gone dead here for this entire period of the last 90 days. If we take a look at roughly 12 months, it's flat, 13. The last point here is at 12, and the before the election was at 13 and 12. So it hasn't really gone anywhere except for those few pumps, and it's still sideways. Bitcoin also, in the longer term, hasn't gone far, but for the short term, you can see the trend beginning to turn up here for Bitcoin, even though it's nearly at new all-time highs. For the FOMO finder and the sentiment of the market, it still hasn't reached any of these extreme levels like level 2 or level 3. Just taking a look at the chart, you've got FOMO, greed, balanced market, and then of course capitulation and panic. We're really just coming out of the panic of April, and there's still been no blow-off top here into the peak. Even the weaker blow-off top for 2021 had some red in it, level 2 and level 3, something that we haven't seen yet for the FOMO finder. And as for Bitcoin, it's still sitting at greed, 73 from yesterday, and today, 73. So we haven't yet touched that extreme greed, which I think is a good thing after the market sentiment reset of April. We were watching the time frames come through with how long it takes for the market to reset in its sentiment, going from those peak extreme greed down to the extreme fear and then the higher lows had all been roughly around that 140 to 150 days. So I think that's pretty crazy that essentially it's happened yet again. Market has climbed higher, but it's not at this extreme point. It's kind of finding its balanced way between neutral and greed, maybe with the odd occasion of it touching extreme greed. But ideally, if it can just maintain itself as it climbs higher, then we have a lot further to go in this run. And that's also helping Bitcoin with the lower prices here for others. So this excludes your top 10, no stablecoins, no top 10 cryptos, all of the other altcoins. Not doing too much again today. Still, price remains to the target here at 7.8 to 8% to get an overbalance in the move to the upside, which would be positive for the altcoin space. It hasn't done it yet. So watch out for that 8%. That could be the first signs that the market is flipping to an altcoin market. At the moment, it's not there yet. Despite all of those other readings that suggest altcoin season's just around the corner, the market where the money actually is not suggesting that until it does hit these overbalanced areas. But while the majority of altcoins aren't looking so healthy, some of them are still in okay positions here. XRP remains that one, above 50% of $1.84. The breakout, well, the first breakout point, the earliest here is around $1.30, $1.35. But the 50% above that, which you can see it had failed out once before and then corrected, is at around 250 to 260. So that would be the key area that I'm watching to see if it can consolidate above that level. That would be a much stronger position than if it only broke out of this zone. Of course, there's a lot of traders who just want to try and get in as early as possible. The only difference here is if it does break this level, there is still more of a chance of it failing and coming back down to test these levels than if it was to break past 250 to 260. So yes, it's a slightly higher price, but the probabilities are more on the side that it's going to hold that level, seeing as it's already hit it once, failed, but put in a higher low at this point. If it runs to this level, it's still at a risk of failing, coming back down and taking out these lows. So it's just a higher chance if you can wait for that break above. And as for ETH, 2,600, couple of good days here above 50%, like we are talking about with the 50s, failed a couple of times, higher low, and then is climbing now 2,600. My key level still at 2,900. And the big one over the last 24 hours was SUI, which just broke past $2.90 after a couple of failed attempts. There's one, there's two, there's three. Here we are at the short-term fourth time breakout, if we wanted to consider that one. This one here is looking just that tad stronger again as it holds above 290 for the first time since mid-June. And finally, Bitcoin on the longer term chart to end here. The biggest hopium I've got is a breakout of this diagonal downtrend, which has been, diagonal uptrend, which has been holding the market for about 8 years. You've probably seen this multiple times before. Now, of course, with July attempting to push higher, especially with everything that we're seeing with the NASDAQ, there is the possibility, if it does happen, we need to see closes above that level for the strength. If it pushes higher and then back under, that's going to be a sign of weakness. At least it would need more time. The price would need more time to consolidate before it can attempt it again. Or for the bears, that would be a great sign for them to see it come back down into that zone. So we're not out of the woods yet. However, I'm still liking the look of the NASDAQ, which continues to push higher with all of that momentum in the background, whether it's good looking economic data that has come out, 4.1%, whether it's the interest rates that continue to remain on hold here to hold this market up, whether it's the S&P also going up, money flow coming through with the US government and their big beautiful bill and trillions of dollars coming through, whether it's the global money supply. There is a lot of narratives that continue to build for traditional markets, and it seems like Bitcoin is just buying time here until it can get to that point of breaking through, and in which case we would then see the stable coins collapse, USDT dominance also begin to collapse past 4.4%, and those altcoin buyers are waiting, at least the conservative ones, potentially waiting for a 4.4, maybe even a 3.7%. At least in my opinion, that's where the faster gains will be had under this level. Gains, of course, are here. Faster gains are here. More fuel to the fire. Like, subscribe. I'll see you back here next week if you're celebrating the 4th of July. Is it congratulations? I don't know. Celebrations all around. Otherwise, for us, it's another beautiful weekend. Take care. Peace out.